Good evening, everyone. It's Quan and Sons with another edition of the BTC Bull Bear series from Trade Devils. I apologize for being a day late in my submission. I actually had something recorded yesterday, but had some technical difficulties, and then was unable to recover what I recorded, and had some family obligations today. So I'm back on my desk and ready to go. So I decided to split today's video into 3 parts, and technical analysis will be only one of those parts. It'll be the longest and take up probably more than half the video. So if that's what you're here for and that's all you're here for, then I suggest you fast forward to the midpoint of the video and try to rewind and find your place in the beginning of that part. Part 2 will be a brief discussion on bear markets, drawing from my traditional market experience, where there's been many more bear markets than in crypto, obviously, given its youth as an asset class. I want to point out a few observations that I've made throughout bear markets that have served me well in my time, and so I wanted to share those with you in case they might be helpful to you in identifying where we might be in a corrective sequence, and perhaps maybe at some point become a harbinger for recovery. And part 1, I feel, is probably the most important thing I'll ever say on YouTube, and I hope that you guys listen to it carefully and take it in the spirit of how I'll say it, which is that I'm just trying to be helpful. For the majority of my adult life, so over 23 years, I've been deeply involved in the capital markets, most of the time as a professional money manager. I've been a CIO, portfolio manager, senior analyst. I've been around ridiculously successful people and learn from them. And despite all that experience and pedigree, I've gotten my ass kicked so epically that it almost pains me to talk about it. Without going into too much detail, I've gone broke personally more than once as a result of improper risk management. I've lost clients of mine who've invested in funds that I've managed 8 figures in terms of drawdowns from their investment. The reason why I'm telling you this and sharing my painful lessons is that I feel a lot of it could have been avoided had I heeded the warning that I got that I'm about to give you. I want to say this with the best of intentions to try to be helpful, and knowing full well that the vast majority of you, more than 90%, will not listen to it, because statistically, more than 90% of the traders will always lose money. And they will lose it to the 10% or so of the traders who understand what I'm about to say and take their money. The financial markets are full contact sport, guys. It's a zero-sum game. There's a finite transactional value available in any exchange on any given day. And if you're losing money on a trade, the guy on the opposite side is literally taking your money. There's a massive transfer of wealth going on every day in the financial markets, from the 90% to the 10%. I've met a lot of the 10%, and I can tell you that none of them, not a single person, can consistently make calls. TA is not about making calls. It's not about price prediction, guys, contrary to popular belief. Good TA is not about price prediction, because no TA can predict price. All TA can do is assign probabilities based on historical movements, and that's it. That's not enough to profit in the markets, guys. I don't care if the probabilities are 80%, it's not enough. You don't believe me? Do this experiment. I've done it many times myself with my employees. Take 2 traders with the same pedigree, given the same exact trade, same entry price, same take profit price targets, same exit conditions, same risk controls, same leverage levels. Put them in 2 separate rooms and you track their progress on that trade over the course of a few days. You will get vastly different results. Do it 10, 20, 30 times and you'll see. Why is that? Same exact entry, same exact TA. It's because what really matters for profitability is the things that people don't like to talk about, that they hear and they kind of just forget or ignore. It's consistency, it's risk management, it's emotional control. That's what good TA allows. Good TA is really nothing more than an approach to develop a process that is repeatable across a wide variety of market conditions, that you can do it on a consistent basis. It should inform your risk management much more than it should inform what the next move in price is. If your TA is good, meaning it doesn't break rules and it's valid as a chart and it adheres to historical probabilities, and you've assigned yourself approximately a 3-to-1 reward to risk ratio on 10, 100, 1,000 trades, you don't need to be better than a coin flip to print money. That's the big secret, guys. I've met Stanley Druckenmiller, George Soros, Jimmy Pilata. He was Paul Tudor Jones' right-hand man. I mean, these guys are multi-billionaires who've amassed their entire net worth through trading. None of these guys are much better than 50%. None. I don't think Warren Buffett is better than 50%. Maybe a few points. Maybe Buffett's up to 60%, but there's nobody out there who's got an 80+% hit rate, guys. You will never achieve that. At best, you might be a few points over 50 after many years of TA. So is that where you want to spend all your time? Trying to refine your count to try to eke out that extra basis point of accuracy? Or do you want to get that risk reward up from 3-to-1 to 4-to-1 or 5-to-1? Do you want to work and be disciplined and consistent and approach the market the same exact way across a wide variety of conditions to allocate your capital responsibly? I know what I would do. When I was younger, I was looking for the magic solution, the magic call, the magic system. I tried all types of things, algos, bots. I mean, there's no flavor of TA I haven't tried, guys, in my 20-something years. And the reason why I gravitated towards our approach that we use the Trade Devils is because I've found that approach to suit me personally. It's the one I best understand, that I feel is most accurate. But even then, I don't expect much more than a 50% hit rate. What I get out of our TA is as much about what happens after the trade than before it. That's the whole point of this bull-bear analysis Sam and I are doing, guys. Trading successfully is hard because it goes against human nature. You need to be very disciplined, and humans tend to be lazy and undisciplined. You need to be humble and admit that you don't know much and you don't have much of an edge at any given point in time. Something that very few people will acknowledge, and humans tend to be too proud. Here's the other thing is people seek validation. We're gregarious animals that gravitate towards like-minded people. And in trading, it's the death knell. That leads to groupthink. If you're in a trade or you're thinking about entering a trade, you shouldn't seek out like-minded people to compare the same chart. You got to go find the guy who's technically competent who disagrees with you. That's the relevant side to follow. And that's really what this bull-bear thing forces as a discipline. I encourage everyone who follows us to always keep at least 2 counts. The count that you're going to trade and the opposite count that you're going to focus on once you're in the trade. Alright guys, so let's switch to bear markets as a topic. So this is part 2. It'll be brief. One of the reasons why I've been consistently bearish for the past 6 or 7 months has been correlations. It's something that I've used a lot in other markets throughout my career, and it's served me well. It really has been a solid indicator of where we might be within a correction or a recovery. So the theory is that when volatility spikes up, which tends to happen in corrections, in the beginning of corrections and in the steep parts of corrections, all the assets that are represented by an index correlate very tightly to that index's price movements. We don't have these indexes or volatility indexes in crypto yet, so I can't show you a chart of this, but just eyeballing Coin Market Cap and some of these other websites that track movements on one page on a consistent basis week to week, I noticed that whenever Bitcoin sneezed, everyone else caught a cold. It was a very, very tight correlation, and that to me has always been a surefire indication that the correction is still underway. Here is a chart of, so I got this from the CBOE website, but it's a chart of a couple of correlation indices. The blue and the yellow and the red represent 3 different correlation indices tied to different maturities. It's not really relevant. The point of this chart is simply that, as you can see, in 2008, when the housing crisis really hit the stock market, correlations of all of these lines went way up, right? And the black line being volatility, when volatility spikes up in the beginning and towards the intense part of a corrective sequence, correlations tend to go very high. And as you can see, there's dispersion of these price charts, which is the opposite of correlation when the correction subsides and you begin a recovery process. I want to see something that looks like this chart in crypto to feel very confident that the correction is over. Another indicator that I look at that isn't as technical, so to speak, but you have to eyeball it and get a gut reaction off of it, is tracking volume. Now, this is a big problem idiosyncratic to crypto in the sense that we don't have just one exchange that trades all the volume for a particular asset like in other asset classes. But here I have a price chart of the SPDR Gold Trust. So it's basically gold. And as you can see, there's a significant drop-off in volume and market participation in the beginning of a corrective sequence and towards the middle. And as it starts to recover, you can see volume spike back up, right? So this is what we call consolidation. A lot of capital flees the market during the intense part of the beginning of a corrective sequence, and then very standard to see flattish, reduced volume. Sometimes can last many years, as you can see here. And then slowly, there's a ramp up. And the gradual increase in volume represents a very high percentage increase off a low base. So you see spikes in price. Oftentimes, they look like dead cat bounces, but with higher lows, higher lows, higher lows, higher lows. And that's how you begin many recoveries. That's kind of what I'm expecting to happen in Bitcoin. And so I track volume, although it's very difficult to do so because we have so many different exchanges, pretty religiously. And the one exchange that has benefited from this correction has been BitMEX. As you can see here, as the correction unfolded and volatility has spiked up, BitMEX has been a huge beneficiary. Which is kind of interesting, right? Who trades on BitMEX? Is it people that are looking to hold assets for a long period of time, or is it, the degenerate gamblers who are looking to lever up and trade the volatility? Obviously, it's the latter, right? So this chart being the exception to the rule, and the rule looking a lot more like this. Let's see, there's I saw this on Twitter. I forgot on whose Twitter feed. Someone sent this to me, and I liked the chart. So I apologize for stealing it, but you can see the decline in volume on some of the major exchanges. It's precipitous. I mean, it's a pretty heinous picture here. And what this tells me is we're still, back to the gold chart, in this territory where we're not done. Capital is not done fleeing the market yet. Now, there isn't literally a one-to-one correlation between exchange volume being reduced and capital fleeing, because volume being reduced could also be partly explained by people who are trading less, but they're still in Bitcoin or whatever coin is being tracked. But my experience is that there is a very strong correlation, even if it's not 100%. And I want to see some of the capital that fled the market come back in and start to generate, some of these spikes upwards. But what do we get over the weekend? We got a lower low and an all-time low for the correction. So I very strongly feel that we've still got months ahead in this correction. And the final thing that I track, by the way, I have a couple other charts to illustrate what could happen. So here's General Electric. It's been a total shit show of a company, if you guys have tracked the news. They've had a CEO change, they've missed earnings, questions around their accounting practices. Anyway, the reason why I bring this up is just as a cautionary tale about volume. It's not always the case that volume spikes up and then moderates, and then there's a period of consolidation, and then as it spikes up and you start to see some recovery in price, that it's sustained. As you can see here, that's certainly what it looks like, right? It looks a lot like the gold chart I just showed. But if you scroll forward a little bit, you can see that it led to a massive, epic dump. So volume is tricky. It's not the strongest indicator to track independently, but it's just another indicator to look for confluence. And now we're starting to see some of the consolidation I spoke about, where there's a huge spike here after what looks like a zigzag correction being put in, and then there's this sideways fuckery going on here, and then there's another dump, but the dump is on much lower volume, right, which tells you that there's a lot of capital that exited the market around these levels. So I would expect this chart to look a lot more like, on the right, to look a lot more like it did here on the left, and then flat, 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 low volume, and then eventual recovery, right? So what does Bitcoin look like? Well, it is hard to say, but I look at Coinbase as kind of the one exchange that most accurately represents retail sentiment. These are the people who are not professional traders, who might be holders of Bitcoin. It's certainly a very popular exchange, and so just given the functionality, it's not a trader's exchange per se, it's more of an investor's exchange, and I think that's kind of the demographic they market to. And look at the volume there. I mean, boom, flat to down, and then it looks like it might be correcting a little bit as it spikes up, and then you get more down. This looks a lot like the GE chart that I just showed. All right, so I'm expecting potentially some other spikes down the road, but over the course of the next few months, for volume to start looking a lot more like here. And then, God willing, as volume starts to spike up in the later stages of correction, it'll actually mean real recovery. Now, from a trader's perspective, this is noteworthy because these are big swings. Whether recovery or not, you can still trade these very profitably. So it's volume over various exchanges, and the trends of it are certainly something to follow. Recall a couple of weeks ago when I did my only bull case update for Bitcoin in the bull bear series, I called this structure right here the most important component of the correction at that point. Obviously this wasn't in. And the reason why I said that was the geometry of this was so awkward relative to this well-channeled move down here, and the slope being so sharp upwards relative to the slopes of these ensuing waves, that figuring out whether this was impulsive or corrective was really going to shape our view on the rest of the entire correction and the possibilities thereafter, right? And the reason why it was frustrating was it could be counted as both 3 and 5 wave. It's not super obvious which one it is. You can count this as 1, 2, 3, 4, and then a failed 5. There's even a way to count this entire move as a 5-wave sequence, although visually and geometrically I think that's pretty awkward, so I wouldn't go there. But I wouldn't argue too strongly with the guy who says it's 1, 2, 3 up here, 4, and a short 5. It's possible. Um, I feel the same way about this move now, except that this move is much trickier. It's got much more twists and turns. The wave shape is more irregular. The wave ratios are more irregular. It's a very hard move to pin down. And we're going to do some of that towards the end of this analysis, but right now I think everyone would agree with me that this can, much like this one, this move can be both 3 or 5 wave. And that's important, that there's a confident 3 wave count on this move down. Now, I would say that it's a little bit awkward. If you measure from here down to the end point of the proposed A or W, and then this is the proposed X or B, and then this is the last leg of a 3 wave move, well, I mean, you're kind of in no man's land. It's not at the 618. It's far from the 100%, which is the most likely wavelength. We're not deep enough in price yet that 100% should be scary. I mean, it could very well go below 100% or even to the 1618 very credibly. And so, you know, it's a tricky ABC count. It's A, you've got this really wide sideways looking B, and it can be counted as a zigzag from here to here actually. And then you can count this as 1, 2, 3, 4, 5, and then we're done. But the Fibonacci wave ratios don't suggest that we're done. It's kind of a weird place for it to land, and there's not a lot of Fibonacci support for this level either, because where would you pull it from? It's a new low. And even if you pull it from the all-time low all the way to the peak or some other major pivot, we're no man's land. There's no major fib level that corresponds to this price level. There might be some interesting algo targets, however, which we'll discuss in a bit. But figuring out what this is something that's going to require more waves to be put in. So what we're going to do today is talk about what a new low means as far as what's valid and what's no longer valid. I think that's a good process of deduction that we should go through. And then perhaps in subsequent videos, as more waves get put in, we can refine specific counts that we'll talk about today as possibilities and try to hone in on one as more probable than the other or vice versa. So let's begin with the easy part. What got invalidated? Well, thinking about it, I would say it's probably 3 categories of counts that got invalidated. Obviously, any bull count that had the correction over at the prior low here is gone. Any bullish count that had the correction about to end because there was some kind of triangular sequence that was about to end, or was on the C leg or something, that's gone because this is a new low. So I know some folks had this as A, B, C, D, E, and then up, but that's gone as a count. Some folks had this whole thing being a W zigzag with an X wave here or here, and then a Y triangle where it was A, B, C, D, E. Well, that's gone because the C can't go below the B. And it can't be an expanding triangle because this point, this proposed B, isn't higher than the A, the origin of the A. It could be an expanding triangle Y still if it went A, B, C, D, E like that, but this wave shape is clearly not that, right? Any count that had the sequence starting from 5.9K to the right as either a B or an X wave with a triangle well developed, meaning A, B, C, is gone because, again, same reason, the C's all the way down here, or that had the X wave or the B wave itself as a triangle, A, B, C, D, E, or something like that, that's gone because of this new low. The possibility that this is a zigzag B or X is also gone, like A, B, C, something like that, because the origin of the A has to be the price extreme low, and we breached that here. Anything else that's gone? I mean, there's a bunch of invalid counts or very, very low probability counts that we didn't talk about because they were so low probability that are gone now too. But of the rules compliant and guideline compliant counts, I think those are the major ones that are gone. So what's left? Well, before we determine what's left, I think we need to revisit this wave here, or this structure here. The reason why I say that is if we can determine with a lot of confidence that it's basically a zigzag, then it severely limits what everything to the right of it can be as a result of this new low. If this is a zigzag and this is some kind of B wave or X wave, I'm pretty sure that this no longer can be a B wave. Let me think about this. If this is a zigzag, it's a three-wave corrective structure. And if that's an A, then the only logical sequence after it to the right would be a B. And it would have to be the B of a flat, because what else can start with a three-wave ABC zigzag pattern as the A? You can have ABC as the W, and you can have all types of X's, but the B of a flat, we know by the rules, can only be a zigzag, or a zigzag family correction. And as we already discussed, there's no way that this is a zigzag anymore as a result of this price low. It would have been a very massively jacked up zigzag anyway, but now it's confirmed that it can't be. And so this can't be a flat correction anymore. It can't be A, B, and then C down anymore. It can still be an X wave, but basically what this structure from 5.9K to the new low can be as an X wave is either some kind of triangle that's pretty jacked up, and we'll talk about that in a second, or an expanded flat correction because of the new low. It can't be anything else. The expanded flat would have you go A, B, C, B, where the B goes below the A, origin of the A. That's susceptible for an expanded flat. And then some kind of C pattern all the way up here, or, well, let's measure. The likely C would be something like 100 to 161.8% of, actually, if it's an expanded flat, it would be more close to 127 to 161% of the A off of the low of the B, which would be here. So I would expect this C leg, if it's an expanded flat correction, to land somewhere around this level. And if it lands all the way up here, does it clear the 90% guideline of retracement for a W, for it to be a qualifying X per the guidelines, to then be followed by something else on the right? Well, let's see. So you would take it off of this 5.9K because this is an irrelevant bottom relative to the retracement, since it's part of the retracing structure. So you would do it off of this, and you don't quite make it. I mean, in order for this proposed C leg to make it as the X of a double three or triple three combo, it would have to be around here, 80 to 90%. So like around this level would be the strong guideline. So what does that tell us? Well, as far as probabilities, what it says is that if this is some kind of X wave, and it's going to be an expanded flat variety X wave, then you probably have a zigzag that follows it. Much more unlikely to have something else, unless that something else is a triangle. So now we're talking about possible counts that are rules and guidelines compliant. Obviously, the guidelines aren't rules, and so if the X wave misses by 10 or 15 points, does it invalidate it? No, it just makes it much more improbable, or you may be miscounting, but still valid. But I'm focusing on the high probability counts here. if this is some kind of expanded flat correction with a C, and it doesn't clear that 90% strong guideline or the 80% exception that EWI is willing to make on occasion, it would be way below that, then it's still a valid X so long as there's a triangle tied to the right. You're allowed a lighter retracement on the X for triangles. And in fact, because triangles tend to be more sideways and shorter in stature, an X that connects a zigzag to a triangle is often just 3/8 or 50% or so retracement of the W. So those are two possible counts that opened up as a result of this new low, where we have an expanded flat X after a zigzag W, A, B, C up here, and then either a triangle that would go A, B, C, D, E, and then the correction's over, or a zigzag that puts a new low in. So what if this is not an expanded flat? Well, if it's not an expanded flat and it's an X wave, then the only other option is a triangle. And there are two flavors of triangles that are still alive as counts. One of them is that the whole X wave is a triangle, meaning A, this whole thing is a complex B, C, D, E, and then down. That's alive. But the count that had us going A, B, C, D, that's dead, obviously. So you would make this entire thing a B wave of a proposed X triangle. Or it could be, I know this is going to be brutal, but it's possible. It could be an expanding triangle X, where it's A, B, C, B, A, B, C, 3 with a new high for the triangle, and it expands. A D below the C, and an E that at least matches, or at least surpasses the C by $1. It's got to clear the C to be a valid expanding triangle. That's a possibility. I know that's geometrically quite crazy, but I've seen that pattern before, where it's a zigzag connected to an expanding triangle on more than one occasion. It's a possibility. The other flavor of triangle that's a possibility, and this one I like less because the geometry really just to me doesn't suggest it, but it's that this is the next wave. This little move here, and then you have this massive A wave for a triangle. And it's still a WXY zigzag, zigzag triangle combo, but the X is super tiny, both in retracement and time sequence, and the A of the triangle is just, I don't want to say so long that it gets disqualified, but it is a very, very long A. It would be, in time sequence, probably more than half the time of the correction. So more than half the W and X combined for just the A of the Y. Seems very improbable to me, but it is a count that works by the rules. So if we assume that both the contracting triangle variety, where this is the A, and this is a complex B, and then we got a C, a D, and an E, or the expanding variety of the triangle X version of our family of potential corrections, what can go after it? Well, given the light retracement, once again, it would most likely be a double zigzag. Unless the expanding triangle expands all the way up to almost 80 or 90% of the W, it would be quite the correction. I think that's low probability. Expanding triangles are definitely much lower probability than contracting, but even within the expanding variety, for this to retrace all the way up here and then down again would be, man, it would be brutal. But yeah, I would say that aside from that edge case, which is improbable, but possible, that would allow then for a Y that could be either a well, could it be a triangle? No, unlikely a triangle. It would have to be a flat correction or a zigzag, because this is a zigzag, so it's either a double zigzag or a flat, where it's a zigzag, triangle, flat WXY correction. That's possible off of both the contracting and expanding X triangle variety. So we've covered the expanded flat variety of the X wave. We've covered the triangle, expanding and contracting X variety of family of potential corrections. We've covered the scenario where this is the X wave and this is some kind of massive A wave. There's still the possibility that, as we said earlier, my bull case that people mocked as the most bearish bull case ever from a week ago or 2 weeks ago, that's still alive. And now that looks like the most bullish bull case ever because it would have the correction in or close around here, which is what I said. I did say that I felt that was really the only viable high probability bull case, and it's still alive, but I don't love it because the X wave is very, very small. I don't mean in height, just in terms of time sequence relative to the very sideways structure of this. So I don't love that one. But it's alive. So what else is there as options? Well, there's one other option for a triangle that I've been toying with, and I want to propose this here, that has a triangle already in with a short E wave. Now remember, with triangles, the E wave is the one wave that doesn't really conform to necessarily to Fibonacci relationships to other waves, because you can have and often have either an underthrow or an overthrow of that E wave. You guys are wondering what the hell I'm talking about, so let me just draw it up here. And I actually ran into this as a possibility as I was analyzing this wave here, trying to figure out what it could be. And one of the things that it can be is that it's an ABC correction here. So A, B, C, okay? And then another ABC zigzag here. It can also be an impulse all the way down here and a zigzag here. But it can absolutely be A, B, C here, and then this little move here is an ABC zigzag all the way up to here. And this is the beginning of the next wave down. In fact, a lot of my colleagues from Trade Devils had it counted that way for weeks, where they had this as a double zigzag combo. First zigzag here, and this was some kind of X, and then another zigzag here, right? And that's still alive as a possibility. If we're going to go for the massive A wave of a triangle, that's not possible because this has to be some kind of motive sequence, but there are other counts for which that count works. Well, if we have this as a zigzag and this as a small zigzag up, what that allows is for this triangle possibility. Now, I'm not saying this is it. We're just reviewing technically valid, rules-compliant options. We'll assign probabilities and pick a count later, but right now we're just listing what's available, what's on the table. Now, the geometry of this I actually do like. It's a short E, but if you measure the waves here, meaning the height of the A, or length of the A relative to the length of the C, and the length of the proposed B relative to the length of the D, it measures very well as a triangle. The ideal triangle has a 6-1-8 relationship between the actionary and reactionary waves. And so this would be the height of the A. And you can see here, this would be the C, right? This would be the A, this would be the C. It's almost exactly 6-1-8 from here to here, almost exactly. And then if I do the same measurement for the B and D leg, so this would be, from here to here would be the B, and I anchor it off of here, beginning of the D. It's not quite exactly to the tick 6-1-8, but it's damn close down here, as you can see. So were it not for this tiny E, this would probably be my primary count because of how well it measures and how well the volume profile suits a triangle where it's been kind of declining with some spikes, but declining. And we're on Bitstamp, but if you pull up another exchange, you'll see that on many exchanges the volume profile is almost textbook triangle, where it's declining and drying up. And then you get, big action here after the ease gets put in, as you get a thrust that could continue downwards. Now, if this is a triangle, then this has got to be a zigzag if this is a zigzag, right? There's an argument that this is a leading diagonal. We'll talk about that in a little bit. I think that's unlikely given the wave shape of this very likely flat corrective structure to begin with. And secondarily, this feels very much like a 5-wave move. And if this were a leading diagonal, you would have to have this as a 3-wave move because there's no way to count it as 5. So then you have to choose between this being a 5 and being very awkward, or a 3-wave, and this being a very awkward 3-wave, or what's much more likely a 5-wave sequence, right? So it's a challenging count as a leading diag, but it's technically possible. But to us, it doesn't really matter. It would probably end roughly around the same ending point, because the way that you would measure the C leg of an ABC zigzag with a leading diagonal A would be the exact same way that you would measure the ending of the Y wave of the WXY double zigzag. And you would measure this, which, just like we did last time in my bull update, and you would try to arrive at some Fibonacci sequence that made sense given the depth of the fall, and you would pick something like 618 to get you to, something with a 2 or 3 handle on there to end the correction. So this is a possibility. As far as likely counts, that's it, guys. Now, it feels like a lot of counts, but the way you would trade these counts is not thinking about the waves that are going to be put in months from now. You would trade them based on key pivots, right? So if this is really a B triangle, or sorry, an X triangle, well, this must be the beginning of a zigzag, right? And with that knowledge, how would you trade this? Well, obviously, you'd be very short biased. You'd look for micro counts that confirm this wave that we're on to be in, and you'd probably short the retrace or something like that, right? My point is, because of the clarity that this new pivot provides and all the counts that got invalidated, I think I've literally covered all the high probability counts in just the 20 minutes I've been talking about this. And we're going to mark up the chart a little bit to illustrate them in a second, but I was just trying to do an inventory of them right now. But I think that's it. So the good news is, as this wave gets put in and we figure out what it is, if it's a rebound, then it very well could be the double zigzag being complete. The bull count that I offered a couple weeks ago that has manifested itself as the only available bull count now, well, that count has a 5-wave sequence completed. It's unsatisfying, not only because this time sequence is so short, as we discussed a couple of weeks ago, but also because the Y is so much, it's so close to the ending of the W, which is very atypical of a double zigzag. A double zigzag is a sharp correction pattern, not flat. But begrudgingly, I would say it qualifies, right? Because it did reach a new low. You have this short little X, and you have such a sharp W that you could have a much flatter sloped Y. So I believe that's it. This is freestyle, so I haven't prepared this. This is all just stream of consciousness. So I may come up with something after I submit the video, but I believe that's it. In terms of high probability counts, that's pretty much it. There may be some other options that are very low probability that violate either a rule or a strong guideline. But if you want to be strict with the rules and compliant to the rule set, I mean, how else would you count this? I think that's it, right? So let's review. Starting with the most bullish option, just let's label this. This is one option where you've got W, X, Y, and it's done. And it would be two zigzags connected by another zigzag. It would be a classic. It would be a classic double zigzag, except that the Y is just, it's unsatisfying because it doesn't reach enough of a new price extreme for me. So I begrudgingly say that this is a valid count, but really in my heart I don't believe this is what's going on. I think this is a very low probability count. But it plays. And because it plays, it's notable. W, X, Y. That's one possibility. Another possibility is the triangle I drew just now. And we're about to put in the A of a much more brutal double zigzag. So this would be the X all the way here. Now before you think I'm crazy, go in. Actually, let's just do it right now. I'll put it on the 15-minute and I'll show you that that qualifies as a zigzag. That little pivot that I'm calling the Y. This qualifies as a zigzag, guys. 1, 2, 3, 4, 5. Right? You got a flat B, A, B, C. 1, 2, 3, 4, 5. A, B, C. Very clearly qualifies as a zigzag. So this is not a crazy count. It's a little bit of a light retrace on the E, but it measures very, very well. Okay, back to, I think I was on the 4 hour. Yeah. So what would this imply? Well, this would imply that we're going to do the expanded flat variety correction. So I'm just going to keep this measurement here, but you could ignore it for a second. What that would imply is that it would be one of those double zigzags with a very flat Y in shape that has more, at best a 618 correlation, not even a 618. So 618 takes you to negative territory, so it would have to be something even less than that, right? Now before you say that these double zigzags, that the Y leg is a very small percentage of the W don't exist and therefore don't qualify, I can tell you without reservation I've seen them often. I don't think they're the highest probability counts, but I've seen probably a dozen of them or so in my career, and fairly recently actually. In fact, one of the chart challenges that we had in our paid Discord that we issued in our public Discord last week was a double zigzag that had a light Y as a result of a very, very deep W. So let me pull up that chart. It was a ticker LKM, it's traded on the New York Stock Exchange. It's a little micro cap company. So there it is. Let me take out this, and yeah, it's on arithmetic right now, so it looks like crap. And this was the chart challenge to figure out what the hell this was. Well, it's a double zigzag with a triangle X. Let me show you. It looks a lot better in log, but the reason why I kept it in arithmetic is, what is the Y relative to the W? I mean, it can't be very deep because the W is just so balls deep. Look at this. It goes from here all the way down here for the W, and then you would have to do it on the orthodox top of the triangle, which would be here, just like we did on Bitcoin. And I mean, the 618 would have you at, it's not valid, right? But here we are. Let's put it on log so you can see it better. This is a double zigzag, fellas. There's no other way to count this thing. This is as clear as day. A, B, C, right? Now this looks a little jacked up because it's in log, but you know, A, B, 1, 2, 3, 4, 5, right? Something like that. And then this is a triangle, undeniably. It can't. I mean, it really. I don't think it can be anything else. Even a triple combo of some sort, I've tried it. I don't think you can count it that way. I'll show you what I mean. So it would be some kind of running triangle. You put the A in this way. The B comes down here. This is the C. This is the D. And the E is the complex wave. Let me show you how well it measures, okay? So this would be the A of the E. Then the B of the E is a triangle itself. A. This is part of the chart challenge, if anybody could recognize this. A, B, C, D. Sorry, A, B, C, D, E. And this is an ending diagonal to put the C in. So A of the E, A, B, C, D, E, C of the E. Okay, zigzag, A, B, C. Now the E can't breach the C. And it doesn't. You can see it. The dotted line never crosses the C. So anyway, we're charting a completely different stock, but my point is this pattern is not that unlikely. I've seen it quite often actually, where you have a double zigzag connected by a very sideways pattern off of a very sharp W, and the Y is not that tall, but still has a clear 5-wave shape. 1, 2, 3, 4, 5. Given how high this is going, it looks like a rebound, and so I think the 5's in. But maybe it's some deep 4 and then this goes down, and all of this is the 3, or this is the 3. But my point is, it's very difficult to count this as anything else. And so, as I said a couple of weeks ago when I introduced this double zigzag possibility, my experience has been that in WXY double zigzag combos where the W is very, very deep, the Y makes up for it some other way. Either, or I should say the structure makes up for it in some other way, either through a very intense period of prolonged consolidation like this. I mean, look at how long this was, right? Many, many months. Or the consolidation occurs on the Y, where the Y becomes much more sideways and flatter in shape. And so that is the variety that I think is available as an option for Bitcoin. You've got a very deep W. You got a super nice triangle with the exception of this E being a little short, but that's allowed within the rule set. And then you've got this ABC that is a little bit unsatisfying because it probably won't hit a Fibonacci wave relationship to the W that is textbook. But I mean, this is anything but a textbook correction. So is this possible? I think absolutely it's possible. It's a pretty brutal count though, because I think the C would go down to something with a 2 handle on it. But it's crazy to say this is not possible. So those of you guys who are figuring out what the hell this is, will add this to your list as a possibility. You don't have to trade it, but your risk management better be aware of it. Okay. So we've covered the 2 double zigzag varieties. There is one more double zigzag to cover, and we'll do that in a second here. So now we're going to move towards the variety of corrections that has everything from here all the way to up here as an expanded flat correction for the X. So let me put this. So what I was suggesting was that something like this was possible. Let me actually show the waves here because it's such an awkward shape. And then the Y would come in. Now, in this family of correction sequences, where you have a W that's a zigzag correction, an X that is an expanded flat, the Y can be either another zigzag, okay, even though this is a little bit of a deeper tracement for an X or a double zigzag, it's certainly well within the guidelines. Let's see. Yeah, actually there's some confluence here. There's some technical confluence here where the C, if this is a completed B here, and we're going up for the C of an expanded flat at 1618, that's damn near 618 retracement of this W, which is a very, it's a probable range. It's a little over, but not too much. So if this C leg comes in here between 127 and 1618, which I would expect it to, something like around here, I might make this my primary count that there's a zigzag here, that the Y comes in. It's a double zigzag correction. This to me, despite the fact that we would go all the way from here all the way to like the low teens, and you know, people would be calling for the correction being over here, just be aware that if you keep buying the dip because you think so, and is it buy the dip, buy the dip, buy the dip, buy the dip, oh shit, where's the dip? There's no impulse anymore, because it might be a Y, right? So this is why you need to be aware of these counts. Even if you don't agree with them, just be aware of them. This to me would be a very pleasant correction geometrically and technically from a Fibonacci relationship perspective and an Elliott wave perspective. You would have the Y maybe not landing at 100%. That would be taking under $1,000, but you know, somewhere between the 618 and the 100, which is a high probability zone. You would have an X that retraces very close to textbook, the textbook range of between 382 to 618. You'd have a C wave for an expanded flat that has a sharper slope than this very sideways B, which it often is for a flat correction. And by the way, what did we say about flat corrections? That B waves have to be zigzags, right? Well, this is a zigzag, A, B, C. It can be counted as a zigzag, so it qualifies. You've got A, B, C, B with a much flatter slope, compensating for all this consolidation that's going on. The B is often much wider and flatter in slope than the A of any flat correction. And then you've got this C that would have a slope similar to this one, a big rally, maybe more sideways, but you know, a substantial rally up here that would have all the bulls popping champagne and then disappointment as the Y comes in. I could see this as being a possible count. The other possibility in this sequence is if the C goes way up, and now we're getting into territory where if it's starting to look like this, I may just call this the bottom and the recovery is underway. Because you know, an expanded flat with of this scale for a correction of this magnitude, to have a C leg that just pops all the way up to almost hit a double top, possible, but I would not count that as anywhere near primary. I'd just be aware of it as a possibility. But in order for this X wave to retrace 90% of this W, it would have to go all the way up here. Now, even if it's just 80%, it would have to land all the way up here, way beyond the 1618. So I think that's unlikely, but it's possible. If it goes up here, then you could have a situation where a flat correction or a triangle could be attached to this thing as a Y. Now, if it doesn't go all the way up there, then it's very likely a double zigzag, like we just talked about. But it's also a possibility that the Y is a triangle. Now this would be one of the more bullish options because it would have the low in here at the bottom of the expanded flat B. Because a triangle, I guess you could have a very large triangle that achieves a new price extreme at the A, something like A, B, C, D, E, something like that. But or you could even have an expanding triangle of death where it's A, B, C, D, and then a huge E all the way to the bottom to achieve a new price extreme. Both of those are options, but if I were to pick one, it would be the contracting triangle that doesn't go below the B. It would be something like A, B, C, D, E. Now remember, in a double or triple 3 combo, the Y doesn't have to achieve a price extreme to qualify. It's not even a strong guideline that it must. That's why they're called sideways corrections, right? So you could have something that looks like this. B, well, this is a little small, but you could very well have a structure that looks like this to end the correction. And that would be something that would be, to me, geometrically pleasing, and from a time sequence perspective would take up a huge amount of time because you'd have to put this very complicated C wave all the way up here. It would take a lot to move this thing from, 5 point something K to anything over 10K. And then to have a triangle attached to it, putting 5 waves in, I mean, would be correcting all next year to put this in, but it's possible. This is if you don't look at it from a time sequence perspective as to, oh my God, I can't believe it, we might be correcting for another year. Just look at the pattern. This is a very probable pattern, guys, where we have a zigzag W, a flat correction as an X, and a triangle Y. It might even literally be on the textbook, on the Elliott Wave Principle textbook. This is very possible. Just to be complete, let's also talk about the possibility that I said was a little improbable, but this thing goes all the way to, let's call it the 7H6, which is close enough to the 80%. And then you have a flat correction here, some kind of ABCY. Now, just because a flat correction is called flat doesn't mean that it can't be deep. Flat just refers to 3-3-5 wave structure. But, I mean, you could easily achieve a very deep low with an expanded C on a flat correction to end the correction at a low with something like a 2 or 3 handle on top of it. This is also quite probable if this X wave retraces all the way up here. Actually, if you look at some tech stocks, and maybe even the NASDAQ index in circa 2000 during the dot-com crash, I believe that you'll see an expanded flat correction with a massive C leg that's something like 2618, a very deep A, something like that. Just to illustrate the point that it can still be quite sharp despite it being a flat family correction. Okay, so let's move on to the family of correction structures that has a triangle X, but it's not that little one that I drew here. Okay, because if it's that little one and we're going down, this is a double zigzag, clear as day. That's the only probable count, and we're going super deep. But if it's not that, then there's this option where it looks like this. Whoops, sorry. A, B, C, D, E for the X. And then if it's this, then this is very likely a zigzag. Now, if it's this is a very tradable outcome because of the following. In a triangle, you can only have one complex wave, and complex is defined as a zigzag, a single zigzag that takes an inordinate amount of time, consumes a huge amount of time, which obviously this B wave would be the complex wave, given, I mean, look at how much time it's consumed, right? Almost more than half the entire correction. That would qualify. So that would mean that this A is a simple zigzag, which it is. This C, this D, and E must be simple single zigzags. They cannot be double or triple zigzags. And that would be an extremely tradable pattern. And then after that, you would have another higher degree, much bigger zigzag to end the correction. Because if this is the X, and given that the E would be such a light retrace of the W, the only thing that qualifies to be attached to an X like that is another zigzag and a double zigzag combination. So you would be able to trade 1, 2, 3, 4 zigzags in a row. And the Y itself cannot be a complex zigzag. You can't have a combo within a combo as a W or a Y or a Z. So you would have 1, 2, 3, 4 single zigzags that have to be single zigzags by the rule set. You could make a fortune trading that because it's just so clear. We also should talk about the lower probability but possible expanding triangle option. Now, I wouldn't be talking about this. I would just mention it, but I wouldn't be charting it had we not achieved a price extreme. All of a sudden, this triangle becomes that much more credible. Remember, an expanding triangle doesn't have to expand like crazy like this. I mean, there's no guideline that says it has to expand by some very, very high percentage. The C just has to clear the A, and the E has to clear the C. And same for the B and the D. Now, if this were lower, say this was like 5.5K or something, I would say that this is quite improbable. But 2 of the legs of an expanding triangle are already in. And the deeper this goes, the more likely this is. Because if it were a triangle X that's contracting, it would be a running triangle, where the origin of the A is not the price extreme of the lower of the BD trend line. Meaning, if it was a contracting triangle like this, the B ends lower than the origin of the A. That's allowed in a running triangle. So both varieties are options, but I want to call this out as a possibility too. Now, depending on how high this X goes, it opens up the possibility that, you know, a flat correction could be tied to it. But I still think that if this is what it is, then the Y has to be, it's very likely a zigzag. And finally, we have this option that I'll chart up in a second, where we have a tiny little X here, and then the A is the complex wave of a Y triangle. This option is still alive. I think it's geometrically just very unpleasant. I don't really love this count, but it's possible. And everything that I said about the complex wave being the B before applies to the A now, where this would be a complex A, and the B, C, D, and E would have to be zigzags, single zigzags. This is also a ridiculously tradable pattern. In fact, I hope this happens because you can make money on each pivot, and then you'd be buying the rebound impulse off of a primary degree at least, if not a cycle level correction. It would be the trade of the decade. something like this is possible. Okay, so I've gone on for, it looks like 50 minutes. And so I'm going to stop here. I hope you guys got something out of this. Again, the point of this was to invalidate counts that were valid before, to talk about some probabilities that are rules compliant and guideline compliant, given that this is a new price extreme to the bottom that just got put in. And I was going to do a count on this wave, and I'm probably going to save that for either Monday or Wednesday or next Friday. But I think you guys got enough of me this week on the bear side. These are all counts that I think you should think about. And as the waves develop, just keep them in mind that they're possibilities, because they all comply to the guidelines and the rule set. And I believe I covered all the major corrective structures that do apply to the guidelines and the rule set. The one thing I'll say before I end it is there is absolutely the possibility of a triple 3 combination, or even a triple zigzag, although I think that's highly unlikely given how deep the double zigzag would go. But when all this ends, this couldn't be a triangle on the X if it's a triple, but if it's the expanded flat variety that we drew up here, and you're putting in a C here, and then a flat correction as the Y, well, you could have another X that could be any combination pattern, including a combo. Could be a WXY itself, or even a WXY XZ more rarely, and then a Z that's something else. That's possible. That would prolong the correction for God knows how many more months or quarters, but it is absolutely a possibility. You cannot discount that. So I wanted to mention that to be complete. All right, guys. Well, let's end it here. Over the course of the next few days and weeks, we will cover the details of individual possibilities that we covered here at a high level as the waves get put in and we get more data. But for now, have a great weekend, and I'll see you on Monday.